Welcome, and greetings to you, ladies and gentlemen. My name's Martin Makofi, and today I'm that guy who's going to take you through some taxes, basically the personal income tax or the pay as you earn. Very interesting subject because I know many of the people that are in employment have been waiting to see what has been the proposal on this one. But before we start the main subject, I'm just going to borrow your time by taking you back in the month of October 2021, where we saw the Minister of Finance, Dr. Situmbe Komsokotwani, who presented the budget to the Speaker of the National Assembly. In the budget, there was one important component, which is our main subject today: personal income tax, pay as you earn. But the big question is, what has been the main purpose, or rather intention, by the Minister of Finance to propose the change of tax bands from the current regime to the proposed regime? The minister has alluded the main purpose is that he has seen that in order to cushion the rise in the cost of living, the Minister of Finance and National Planning has proposed to increase the exempted threshold for pay as you earn from 4,000 kwacha to 4,500. Just looking at the increase which has been proposed, the tax-free amount is 4,500, meaning any employee that is earning a salary of 4,500 kwacha, this will be free, tax-free. Kulibe tax, takuli tax, it will be free. But anything that's going to go beyond 4,500 kwacha will be exposed to taxation. We are saying pay as you earn right now. So look at this. This is very interesting. Um, this measure is actually being aimed at providing relief to employees and self-employed individuals, especially those in the lower income brackets. Hope we're together. So if you look at my screen, we have got the current pay-as-you-earn regime and the proposed pay-as-you-earn regime. So if you look at the bands, income bands here, we are looking first in the current pay-as-you-earn regime, which was actually implemented in the year of 2021. Yet we are yet to see what has been proposed for the fiscal year, which will run from 1st January 2022 to 31st December 2022. So any employee, this is in the current regime, right? Any employee that was earning 4,000 in the current regime, this was tax free at 0%, was paying tax at 0%. But all those employees that started earning salaries of 4,001 to 4,800 per month were taxed at 25%. And those employees that were paid or getting salaries of 4,801 to 6,900 per month were taxed at 30%. What about those employees that were getting salaries above 6,900? Those were taxed at 37.5%. That was in the current year regime, 2021. But now let's move on to the proposed pay-as-you-earn regime. What weight does it carry, or what significant changes has it come with it? If you look at in the proposed pay-as-you-earn regime, any employee that's earning a salary of 0 to 4,500 per month will be taxed at 0%. Kulibe tax, no tax at all. Okay. Then if you go in this next second line here, you see that there is a slightly change. Look carefully on the second one. The ministers proposed that all those employees that will be earning 4,501 to 4,800 per month will be taxed at 25%. So here on the second line, there's a change. Previously, in the current year regime, here, the difference between the 4,000 and 800 was 800 kwacha. But in the proposed pay-as-you-earn regime, the difference between 4,500 to 4,800, it's 300 kwacha. Okay, you will understand this when we start doing computation. So I'm just urging all the viewers to stay tuned and follow the video till the end for you to understand what's happening here. Then those employees that are earning 4,801 to 6,900 per month will be taxed at 30% in the proposed pay-as-you-earn regime. Then all those that are earning a salary that's above 6,900 kwacha are being taxed at the highest tax rate, which is 37.5%. Now, the big question is, if we look at in the current pay-as-you-earn regime, 4,000 was the free amount, tax-free amount. In the proposed pay-as-you-earn regime, the tax-free amount is 4,500. 4,500. Now, we are all under the impression that there is an increase of 500 kwacha because the current year was 4,000. The proposed is 4,500. So we are under the impression that the increased amount to employees and self-employed individuals is 500 kwacha. But the big question is it true that 500 kwacha has been added to your salaries? What do you think? Is it true? If you want to see whether it is true that it's a 500 kwacha or not, follow our computations closely and see that the amount that you are seeing is not actually the amount that has been added to your salaries. So just follow me closely. We're going to jump from this page to this page. Now, if you look at this, the pay as you earn in Zambia 2021, these were the rates. I think we're just from looking at something like this in the current pay as you earn regime. Then also this side, it is this side, it is the proposed pay as you earn regime. Okay, so in order for you and me to be able to make one another understand, we are going to do a computation by choosing a salary of one individual. I wish it was live so that you can suggest any figure, but in this case, I will have to choose any random figure. And let's assume you, who is watching, your salary is 16,000. Okay, 16,000. Okay, your salary is 16,000. Let me highlight this. It's 16,000. Then you're wondering, this is your gross salary. You're wondering what taxes will be deducted from my salary and what will be my net. So we are going to do computations. There are three taxes mainly that we're going to discuss and talk about in this computation. Number one, it will be the pay-as-you-earn itself. Number two, it will be NAPSA. Number three, it will be National Health Insurance Scheme, NHIMA. These three will be the components that we're going to discuss so that at the end of it, we can know whether is 500 kwacha which has been added to our salaries. One. Number two, we're going to see the total statutory deductions and see our net, our take home. Okay, we're going to compute both from the current pay-as-you-earn regime using the same salary, and also from the pay-as-you-earn, the proposed pay-as-you-earn regime using the same salary that we have selected, the 16,000 kwacha. So to begin with, in order for us to know the tax that's going to be deducted, we begin first by knowing what is the first band. The first band is 4,000 kwacha. Okay, is 4,000 kwacha at what? At what rate? At 0%. Okay, that's how it was in the current pay-as-you-earn regime. Okay, at 0%. Then next, okay, it's what? It was 800 kwacha at 25%. 25%. And another next. And another next. How much? 2,100 at what? At 30%. Okay. Anything that's above, or the balance, if you want, you can say above, or the balance will be taxed at what? At 37.5%. Okay, we can try to use this format. So copy and paint this standard. Okay, so you see, now someone might be wondering to say, where is this 800 coming from? Where is this 200 coming from? Where these bands are coming from, my dear friends, so for those who do not know, when you go in the standard provided bands, you need to find the difference between this band and this band. The difference of this is the 800 kwacha coming here. And also the difference between the 48 and 69. The difference between these two is the band which is coming here. Okay? But what about the above? The above is anything that's above this 69 will be taxed. So meaning that this one is tax free amount. Okay? Anything that's above that. The maximum is 6,900. Okay? So to compute this one, let's start computing. 4,000 at 0%. What you get? You get 0, isn't it? Libe. You get 0. 800 kwacha at 25%, should be getting 200. Is it? 800 at 25%. Yes, 200. 2,100 at 30%, you should be getting 630. Is it? Just confirm with me. 2,100 at 30% is 630. Okay. Now we need to know what will be okay. So this is actually rounding off. We don't want it to round off. So what we do, we're going to go back here and click this like this. Save it. Okay. Yes, so it can be clear at 7.5%, even though we know rounded off is 38% that's being deducted. Okay. Then the total of these three. Okay, the total of these three. But I thought I wrote salary here. So we're not misled. Yes, this is a salary, no? Then the total of these three is what? Should be 69. You can help me add these figures together. 4,000 kwacha plus 800 kwacha plus 2,100. The total is giving us 69, which is here. Okay. So what you do here is we want to find this figure 16,000 minus 69. Okay, what you get is 91. So 91 is the balance from your salary. If you get paid 16,000, we'll remove 6,900 as tax free for you. The balance is what we taxed. So we bring here 9,100 like this. Okay. So what is 9,100 at 37.5%? I'm sure you should be getting something like 3,412.5. Okay, just confirm with me. Can someone confirm with me? 91 times 37.5%, 34125. Okay. So what is the total? The total income tax payable or pay as you earn. Total income tax payable or the pay as you earn. Total income tax payable or the pay as you earn. So what we do, we're just gonna do these, choose those and put equals. Okay. In fact, just gonna do a shortcut. I'm just gonna do a shortcut like that. Okay, if I click enter, it's telling me that the income tax payable or the pay as you earn will be 4,242.5. This will be the tax paid, okay, or the pay as you earn. Okay, so this is just the pay as you earn we're talking about, or in brackets we can also do this and say so that someone does not get confused. Someone out there, I know what I mean. Okay, but no, I'm going to do this. I'm going to wrap text. Okay, that's much better. Okay, so this one is income tax payable or pay as you earn. This is the figure, the income tax payable. Now that you know the tax that you're going to pay, let's also compute another tax that will be deducted from your salary, which is NAPSA. Okay, NAPSA is always taxed at what? Can someone tell us? Can someone tell us? At 5%. So we know that your salary is 16,000 there. Or should I put it so that you don't get confused? Because I know some of you guys get confused. We know that your salary is 16,000 kwacha. Okay. Is 16,000 kwacha. So you're going to have your 16,000 kwacha there. Okay, multiplied by 5% there. So your NAPSA are going to pay from your salary is 800. Mind you, NAPSA's NAPSA's Act guides us that we should compute the 5% tax on the gross amount. Okay, on the gross amount. So supposingly, if you had some allowances there, NAPSA was going to be computed based on the basic plus any other allowances that were going to fall under it. Okay, on the gross amount. Okay, so which is 800. So on NAPSA, the employer or the employee, the employee, you are obligated to contribute 5% from your gross salary. And also the employer is obligated to contribute 5% on your behalf. So what is limited for you as an employee is your 5% plus 5%, your 5% plus your employer's 5% makes it 10%, is remitted for you on your behalf to the tax authorities. Here in Zambia, we call them ZRA, the Zambia Revenue Authority. Okay? Then we move on. There's also another tax, another component, very important. It came into play somewhere in October, 1st October 2019, if I'm not mistaken. This is what is called the National Health Insurance. And many people have been trying to understand what it is, what's the rate, that the tax rate being taxed. Though for those that do not know, this is your opportunity tonight. Okay, so the NIMA Act, National Health Insurance Management Authority Act, guides us that we need to tax 1% of the employee's basic salary. You see the difference? NAPSA, we said 5% of the gross salary, but for NIMA, it is 1% of your basic salary. Okay, hope I am very clear on that one. If you got it, write me a comment down there. If you didn't, we can still chat over it. So 1%, just normal, not too fast. If I'm too fast, tell me. Otherwise, I think I'm just normal for you to follow. So NIMA is 1% of your. So we just copy this, bring it down. Control V. Okay. Control C and Control V. 16,000. So we're going to apply just 1% of this. 16,000 applied by 1%. Enter. So it's 160 kwacha, which you're going to remit from your 16,000 kwacha. Now, what is the total statutory? So this is an answer. Also, this is an answer. Okay, these are answers. So we need to find here total statutory deductions. Okay, total statutory deductions. So this will have text. Okay, total statutory deductions are going to be equals the income tax payable plus NAPSA plus that total. So the total statutory deduction will be 5,202. And what will be your net pay? Your net pay, my friend, is going to be Your net pay, it's important. Okay. If I want to touch it, I can just copy this and do the penta. Do the penta. But you see, I have text as well. This is your total. So your net pay is going to be equals your total salary gross is 16,000 minus your total deductions, and so you take home, if your salary is declared to be was declared to be 16,000 in the current pay as you earn regime, then your take home was 10,797.5. This is in the current year regime. Now let us move. Okay, I hit this one. I can freeze it. I think view, so that yes, the pen, we know what we're talking about. The pay as you earn. This can freeze it like that. Okay. Then we come to the proposed pay as you earn regime. So for the proposed pay as you earn regime, look at what's going to happen. We are going to do what? Okay, the bands are here. So, okay, we'll start just all over. Just copy this and bring it here so that we know that the salary we're talking about is 16,000. Okay, 16,000. So the question is what will be the salary, or what will be the tax paid by an employee who is earning 16,000 in the proposed pay as you earn regime. So do the same. First, what's that? So first will be at 4,500. This one will be taxed at 0. Huh? At 0 what? 0%. Will be taxed at 0%. Then the next, how much do you think we're going to put on the next? I know someone is going to say 800. But this time around, the Minister of Finance, Dr. Situmbe Komsokotwane, has proposed that the rate will change in the band accordingly there. You see, when you check the difference between 4,800 there, 4,500 there, and 4,800 there, you'll find that the difference now here, instead of using 800, the proposal is 300. That's what I'm finding there, unless someone has got a better explanation to tell me why we should use 800, because what I can see there is 300. Then at what percentage? At 25%. So this is a new feature that we're going to see. For a long time, we've been using 800 here, for a long time. But this time around, the proposal is 800. Don't forget, the main reason why we're doing this computation is two things. Number one, we want to see if truly is 500 kwacha, which has been added to employees and self-employed individuals. Number two is to consolidate the full statutory deductions, which is the pay-as-you-earn, NAPSA and NHIMA total, so that we know how much someone is able to take home when they're told your salary is 16,000. How do they know how much will I be taking home? This is what we're doing. You can use my same explanation and example to change whichever salary you have. Just replace where 16,000 is and do the same. Follow the same steps that I am doing. Then you're going to see that I think we'll be hitting the same time. Excuse me for that. Then we move on. Another next. Um, Another next is how much? It remains 2,100. Why? Because if we subtract 4,800, which is here, minus 6,900, still have the 2,100. This is the one coming here. So let's hope you're following. Nice and easy. Then 2,100 will be taxed at what percentage? The same 30%, still the same. But what about anything above? Anything above this, which will be taxed at what? We will find out. By the percentage, we know the percentage, we know it will be 37.5% one. A very big tax rate there, 37.5%. Then, what next? Let us find out. Now, the totals of this, is it going to be the same as the current year, the current pay as you earn regime, or there will be a change? Let's add these three and find out. So the first one is 4,500 plus 300 plus 2,100. It's 6,900, still the sum, 6,900. So here we'll do 16,000 minus 6,900. Okay. It is still the same. That's why you can see on top here, it's still 6,900, 6,900. Here the balance, there's no change, despite there a proposal being back to 300. And that's the reason there's no change here, so you're still being affected. At this, the 800 remains there. You are going to be getting a tax-free amount of 7,400 somewhere there. Okay, but what do you expect? There you have 9,100 kwacha. So the 9,100 kwacha you have is a tax-free amount there. So is it the amount that will be, sorry, it's the amount that will be taxed, not the tax-free amount. So 9,100 is the, okay, the amount that will be taxed. So let's do the computation. 4,500 at 0%. What do you get, brother? You get 0. 300 kwacha at 25%. I think you get 75. Can someone help me do the computation? Tell me the figure they're getting. 75 kwacha, then 2,100 at 30%, you get 630. Someone do the computation and agree with me. Then 9,100 at 37.5%, you should be getting 3412.5. 3412.5. Okay. Can someone reconfirm that one? 9,100 times 37 multiplied by 37.5%, 3412.5. Yes, so the total of these figures, so we'll do Alt equals enter. Alt equals enter. Okay. Alt equals enter. So this is our do this. This is our income tax payable. individual income tax payable, not company. Individual income tax payable, individual income tax payable. Okay, or I can just copy this and paste it here. Control V. Okay, so we have our income tax payable. So you can see that in the current year regime, you will be earning a salary of 4,242.5. In the proposed pay-as-you-earn regime, your salary will be your income tax payable will be 4,117.5. Okay, then we're going to borrow this, okay, and bring it here. Okay, yes. Then we'll say that is there any changes? This does not change. So we'll copy this and paste it here as well. The formula, we have copied the formula, mind you, so meaning that it's able to pick 16,000 at 5% is 800. 1%, 16,160. Now, let me clarify something on the NIMA and the NAPSA. Here, the NIMA and the NAPSA are applied to the same amount, 16,000, because we are assuming that this employee, 16,000, it is his gross, it is his basic. Okay, there are no any additional allowances. But supposingly, the employee, mostly, let me use this term, junior staffs, their salaries varies. They have got components like housing allowances, okay, which fall down there, and others have got also other allowances, transport allowances, and all those. So, addition of those, that's where total of all those allowances, including your salary. In short, let's use the term emolument, total emolument. So your total emolument, your total emolument will come up with what we are calling gross salary. Then the NAPSA will apply to that. But the NIMA, National Health Insurance Scheme, will be restricted to the basic. Those additional allowances, salaries, it will not apply to those, only to the basic. Hope I am clear on that one. Then, so we see that the net pay, there's an increase in net pay in the current pay as you earn regime. Your net pay was 10,797.5. Watch out. Okay, 0.5 because of formula. If I do that, then okay, unnecessary to do that. Then trying is learning. Better than nothing. Then better not trying. Then net pay in the proposed pay as you earn in the year of 2022 will be 10,922.5. So let us find the increase. Okay, the increase. What has been the increased amount? So if we do that, we are going to say in fact, not me writing, let me just do this. We'll get this, paste it here in the current year regime, and we'll also get this and paste it here. So we've got the current pay as you earn regime and the proposed pay as you earn regime. So net here is this in here. Okay, because of formulated, it's formulated. Okay, so Control Z. Okay, we need to go back and skip. So we're going to say 10,797.5. This is the net pay. This is the net pay in the current pay-as-you-earn regime. And what is the net pay in the proposed, which is 10,922.5. Okay, so we find the figure here, the total. What is the difference? We find the difference. So this in the proposed pay-as-you-earn regime minus this net pay in the current pay-as-you-earn regime, which is 125. This is the difference. Okay. Center. Okay, so this is the difference. To prove this, we can also find the difference just on the pay-as-you-earn regimes. If we say here, this, we bring it here. This was in the current year regime. We bring it here. Okay, it's formulated. So, force rate 4242.5 here, and also this one here, the income tax payable in the proposed pay-as-you-earn regime, which is 4,107.5. Okay, so if we find the difference also between those two, we say equals this minus that is equals to 125. It's still the same. So do you know this figure 125, the difference we're finding? This is what has been increased to salaries, you employees and self-employed individuals. But if we look at the salaries, if we look at the increase, it tells us that there's an increase of 500 kwacha. But if we do the computation and see the actual increase, we are finding that it is only 125. Well, thank you so much for your time, everyone. Uh, this is all I had for you today. Please remember to subscribe and like the video for more videos. There are many topics that are actually in the budget. If there's anything that you have not understood and you wish me to talk about, please feel free to comment and we'll discuss about it. There are so many exemptions, so many favors that have been imposed on many different type of industries. Thank you so much for your time. The presenter for this subject today was Martin Makofi. Looking forward to see you next time. Cheers.